Hey guys, this is Jim Trader for another video. Today we are going to talk about fair value gaps, and I know that a lot of you have been waiting for this video in the group, in the open chat group that we're running. Hopefully it's going to be useful to you, at least as useful as it is to me. And so without further ado, let's start. Before that, actually, please like and subscribe. Remember to join our nice community. I'm gonna put the link in the description. We are having great calls there, great conversation, great analysis, great people. So join and you won't regret it. Alright, so let's start. What's a fair value gap? So that's fair value gap is just a concept like the concept that we have been talking about before, like liquidity concept. The fair value gaps is really something that is a visual area that you can actually spot on the chart. It's a zone where the price is showing what a lot of people call imbalance between supply and demand. When there is a very fast movement in one direction, you will see a gap being created. So zone on the chart where people have not been able to buy or to sell because the price moved too quickly, and that will generally leave like a long red candle if it's a bearish FVG, or a long green candle if it's a bullish FVG. So we could actually have a proper description, a proper definition, and that's the following. So the FVG, how do we spot it? How does it form? You need first to have a first candle that has a strong direction strong movement in one direction. When I say strong movement, it just needs to be a definite bearish candle or a definite bullish candle, not one of those like you don't know, so middle small candle. We're talking about a definite move like the first candle here on the left. The second candle should have a body separate to the first one, so they're not like overlapping. Right, so you can see a second candle, and the third candle is a continuation candle in the same direction, thus leaving a gap between the wick here, the bottom wick of the first candle, and the top wick of the third candle. Okay, so you'll have one gap here according to the definition, you'll have another gap here still according to the definition, first candle down, second candle not overlapping with the first one, and a third candle continuing the move, and you also have a third fair value gap here. That should be touching the wick here. It's just a mismatch, but you understand what I mean. So this is a bearish FVG, right? Those are bearish fair value gaps. We're gonna just refer to FVG from now on, so you guys know what we're talking about. It's a fair value gap. That's a bullish one. Okay, still following the same definition, a candle moving definitely in one direction, decisively, bullish candle. The second candle doesn't overlap with the second one, the first one. We have a move, and then we have the third one continuing. Okay, that's the gap showing here. And it's interesting to note, this is actually from the Bitcoin chart, right? That's a monthly FVG, and I tend to put them in purple for people who have already been following me in the group for a while now. You will know that I highlight monthly FVGs in purple, the weekly ones in yellow, daily ones in blue, and I go down as well. I could go down to the 5 minute or the 15 seconds. Doesn't really matter, you can have your own colors down there. It's important to know that FVGs happen on every single chart, every single time frames, and they are like fractals, so you could actually have inside of this monthly fair value gap, you could have a couple of weekly fair value gaps, you could have maybe 4 daily fair value gaps or whatever, you could have maybe just one big weekly. So it's always important, once you spot one fair value gap on the monthly, to go down to the weekly and to go to the daily. That's the 3 time frame that we always have to review every time we analyze a chart, monthly, weekly, daily. That's the 3 main time frame, and you could just stop there and be a successful trader. You just cannot win at trading if you don't analyze monthly, weekly, and daily. So for me, always the most important is a monthly, and that's what I showed here. Okay, so how can we use them in trading? So it's good to know that we have fair value gaps, all nice and sweet, but how do we use them? Basically, fair value gaps are retracement zones. They're like magnets for price. Because the price moves so quickly in one direction, and a lot of people, or the whole market, did not get a chance to sell at some place or buy at some levels, the market tends to go back, retrace, and offers this price again to traders, to the market. So the patient people will get the chance to either buy at this level or sell again at this level. When the price here moves that quickly, a lot of people who wanted to sell did not get a chance to sell because the price, let's say someone sold like 100 million and the price just collapsed, right, very quickly. And nobody got a chance to sell here because the price just collapsed and created a lot of gaps. So they act as magnets. So price usually tend to go back like this one here, okay? So I use them myself to define my directional bias. With those information given by the fair value gaps, it tells me know where price is going on the monthly and on the weekly, and then on the daily as well. So they also act as confluence because they are such important points on the chart that you can combine them with other important concepts like liquidity zones, below equal lows or equal highs, below round numbers or over round numbers, and you can combine them with indicators as well, like a retracement over 50%, over 61.8%, or with your EMAs as well. If you're someone who uses EMA, you could combine EMA's crossovers with fair value gaps as well. Then, directional bias. So what do I mean by that? This is a monthly chart of Bitcoin from 2014 to today, and you can see that Bitcoin has been going up, retracing inside a fair value gap. So what do I mean by inside? Well, we want a fair value gap to be respected, to be counted, right? A fair value gap that is not respected, for me, I just ignore it and I just discard it. What do I mean by respected? On the same time frame that you're watching the fair value gap, you need to watch how the candles behaved when they got to that fair value gap. You must have all the bodies of the candles, of the retracement candles, closing inside or over if it's a bullish fair value gap, right? Because we're talking about bullish fair value gap here, or inside or below the fair value gap if it's a bearish fair value gap. Okay? The body should not, in this case, which is bullish, the body should not close below the fair value gap. In that case, for me, that would be a new fair value gap, and I wouldn't even consider it anymore. I would probably just remove it from my chart and actually make other assumptions. We'll come to that later. But in the present case, you could see that Bitcoin has respected this fair value gap because a wick went in, but the bodies closed outside, over, or inside. Well, there's nothing closed inside there, but you see what I mean. In general, the wicks don't really matter that much. The wicks are there to make damage, to cause maximum pain, inflict maximum pain to traders. So the wicks can push the price even further than the fair value gap. It doesn't really matter as long as it comes back up and closes inside or over. So you can see that the monthly was respected here, price goes, I did not highlight this one, but for the people who have actually some good eye, you could see here there's also a fair value gap. So the three candles, 1, 2, 3. There's a gap here. What did price do? Dip into the gap. Boom. So that was respected. Bitcoin is still bullish. Bullish, bullish. Same here. That was the example before. Fair value gap. Price went down into it. Boom. So we know that Bitcoin is bullish. And here you have retracement. That was the big 2019 push, like the DeFi craze, created a few fair value gaps on the monthly. Price went down into it. That was COVID. If you were there during COVID, and I guess you were, and you were scared like everybody else, you did bad to be scared because you didn't know what I'm teaching you right now. Look, price just went down into the fair value gap here and here. Only the wick got here to inflict damage, touching the second fair value gap. Price corrected. All the candles closed within the fair value gap that were created here. Boom. We should know by here. If you did not realize it, if you're too scared to buy here, and then the month closed here, you have another monthly candle that closed, that's enough for you to understand that this is bullish. Like everywhere else, Bitcoin respects the monthly fair value gaps that are created. Bullish, we buy, go up. We have a first fair value gap here that is respected. That was the 30,000 accumulation for many weeks. In 2021, we pushed, make a new high, collapsed. Price fell inside another monthly fair value gap. Respected it. We should already suspect that we are bullish. Again, another fair value gap. Here, especially this one, we accumulated for 5 months inside it. You should realize that this is bullish. Price is respecting, and this is just a monthly, right? If you had gone down to the weekly back then, you would see that it was also respecting weekly fair value gaps. Here, this one is not really a fair value gap. We're going to come to that a bit later, but I still counted it because I went down to the weekly, and yes, there were some fair value gaps there on the weekly. And then you have this as well, again, not too long ago when we dipped below 50,000, remember, inside a monthly, and then went up again, right? So Bitcoin story, always respect the fair value gap basically and keep on going. ICP on the contrary, you see that's a weekly because there's not enough information on the monthly, so I'll take the weekly. ICP just collapsed from the release in 2021, I believe, and retraced inside a fair value gap here, the only one that was present. Actually there was one up there, but it never managed to get there. Went in there because the price was so bullish, collapsed. Again, we made another one here. Price came back, filled it completely, collapsed. We have another one here, so 1, 2, 3 that I forgot to highlight. Price went back here, not even filling it to a quarter, collapsed, went back again because it's still valid. It collapsed again. We made a massive one here. Price went back in, price collapsed. Basically, you could do this work by yourself after the video. ICP was the easiest coin to short all this time, just waiting for price to be back into fair value gaps on the weekly and short it. And even after the big reaction there, we went back up here to one of those gaps and price starting to collapse, and that's where we are right now. Okay, so yeah, I'm just mentioning here that we had a market structure break here. That's a big difference, and now we are fighting in this zone, which is a gap. not a proper gap according to the definition, but when we go down to the daily, you'll see that there are many proper fair value gaps down there. So it acts also as retracement zone and confidence. I'm not going to take too long on this, and I'll leave you could go back to the video and read a bit more of what is written here. And for the people in the group, we'll be talking about this PowerPoint a bit more. But basically, you have to know that the retracement zone that is highlighted by the fair value gap is one of the most important for me. Okay, so I usually try to combine it with something else. It could be a retracement over the 50% mark on the Fibonacci retracement. It could be being around a round number, like we just mentioned here. For example, go back to Bitcoin. Here we had a fair value gap here. The wick did the damage. We went to 48k, just below 50k, just scaring everybody else, apart from the strong traders who were waiting for it. And we bought it because it was a liquidity concept plus a fair value gap. So we bought it. And you could also combine it with EMAs, like we said, but that's for another videos. I don't use them very often, but sometimes they can be useful. So here, let's make a quick exercise. The video is already quite long, so did not mean to be so long, but it's important to you, for you to train your eye. So where is the fair value gap here? The bearish fair value gap. We're looking for a bearish fair value gap. Where is it? There it is. You see, a lot of candles, nothing really happening, but the market is telling us, I have chosen my side. I moved in a direction with force. Which one is it? This one. When the price starts moving in a direction with force, that means that strong forces are involved. That's all. People with deep pocket are involved. They can move the price quickly in one direction because they sell for big volumes. Okay? So you always need to take that into consideration and don't ignore it, because I'm trying to tell you something. Okay, and let's see an example trade here. So we have the same chart than before. We have price going up, higher high, higher low, higher high, higher low, higher high, taking this high, stopping people, and then the price collapses. Market structure is broken. So the FVG is created after the liquidity run. So we have a liquidity run, people are stopped, deep pocket are allowed to short massively because automatic buys were triggered here with the stop losses, and also the weak traders starting to buy because they thought it was a breakout and it was going to the moon, so big traders could sell. See, price made a fair value gap here. Okay, we have a market structure break at the bottom, the lows are taken. What do? We wait for a retracement inside the fair value gap and over the 50% mark. So we have a combination of two factors. That's the 50% mark, that's a green line. Price goes over, actually probably closer to the 61.8%. And the golden ratio. We don't even have the actual price there. If price goes over a big round number, it's even better, obviously. Price feels, first it goes into the gap. You could take shorts here, it doesn't matter. You don't have you do not have to actually get the absolute high. When you take a short here, you basically have to put your stop loss over the high of the first candle that made the fair value gap. That's what I usually do. I didn't write it here, but that's something that is very useful to know. I will put my stop loss here over the high of the first candle of the fair value gap, and I will be just waiting, so obviously I would have been very happy at the start, and then the price reverse. Most people will start panicking and closing. I don't close. I'm in drawdown. I don't care because I'm still within the fair value gap. The bodies are still closing inside, as you can see. That's a daily chart, by the way, guys. So it's not like we've been waiting for months. That's just a few days. And then finally, the people who have been waiting get rewarded. The daily gap just crashes the price down. That's a Bitcoin chart on the daily back in 2021, I believe. And that's it. We just collapse and make big gains. Another trade here, an example trade with the prices this time. We have a weekly, that's Bitcoin chart again. We have a weekly gap down there. Here, fair value gap, price does its thing, like ranging, staying in the same range for a while. Finally, making a lovely lows. We have equal lows here, you can see, almost equal. Price takes out all the shorts, all the stop losses of people who thought that it was a big support, goes down below 40,000, scare everybody else, hit the fair value gap on a weekly, move back up. You know by ear, and if you are not here, you have another week to realize that the price is starting to move away. You should be long here. You should have no excuse. Seeing what happened below the big round number, big traders bought it back, fair value got respected, the liquidity was taken out of the equal lows. We need to be long. And on the cherry on the top, we actually just like almost touched, but very close to the 21 weekly EMA, which is a very big support usually during uptrends or downtrends, you know, big resistance in downtrend and big support in uptrend. So price just went banana, you know. Remember, this is just like last year, very easy long. So a few tips before we wrap up the video, guys. Always use the fair value gaps in accordance with the time frame where they appeared. You cannot like just see a monthly fair value gap and go to the 4 hour and hope that the 4 hour chart will respect the monthly. You will have a lot of candles closing outside of the monthly fair value gap. So and that doesn't matter. You know, the monthly fair value gap should be compared to monthly candles. Same thing if you're looking at the daily fair value gap. It doesn't matter if 1 hour candles close outside of it. You just have to look at the daily candle. Obviously, a daily FVG is much stronger than a 1 hour FVG, and a monthly FVG is much stronger than a 4 hour FVG. And yeah, that's what we mentioned before. You have to be patient. You know, if a price goes into a weekly FVG, you have to be ready for the price to react from it in a couple of weeks at least. And same for the monthly. For the daily, you have to wait for a few days as well. You know, it's not going to happen in a few hours. If the price doesn't have to fill the entire FVG, I mentioned that as well. You know, actually, this is something we could expand on later. When the price actually doesn't fill the full FVG, it could be very bearish. For example, if the price retrace, it could be very bearish. If it's a bearish FVG, the price goes back up in it, doesn't even feel it, and reacts powerfully again, continuing the downside movement. That's a sign that price is very bearish and in a hurry to go down. Okay, and same for the other side, basically bullish. Don't forget to take profits when you face fair value gaps, because we know that there are strong resistance and support zones. So when you're in a counter trade, we are in a trade, and you start facing like big fair value gaps on the opposite side, take profits or close your trade, depending on your analysis. And last one here, just to illustrate what I just said. That's ICP. All of you recognize it. And look at that. We have a bearish fair value gap here. Price went back up, closed outside of it, So in my head already I'm discarding this fair value gap. For me it's burnt, and it's actually telling me that possibly the price is bullish, because we didn't respect it. We move back anyway, and we do not make a new low. That's another reason for me to be wary. If a fair value gap repulses the price, and the price doesn't make a new low in this case, because it's a bearish fair value gap, or a new high when it's a bullish fair value gap, you got to be very careful. This probably means that the price is gonna change its course. And so it happened. So it happened. We had this warning, and the price started to move up, taking out pretty much everybody. And that was just a picture of this morning when we went back to actually our target, filling this gap, guys, this gap. And I'll leave it to you. You could go down to the daily here, and you would see that we just filled the daily, a proper daily fair value gap here, and it's all filled, and price is going back up. Is it going to make new highs? We don't know yet, but putting us buy here below $6, below the liquidity pool here, at the bottom of the FVG, you would have been making 30% in the day. I believe that was 30%. Okay, so I hope that was useful, guys. Don't hesitate to ask questions, and contact me in the group. I'm always there. Obviously I don't always answer in the next minute or even the next hour, but I will always read the message that you sent and answer them. Hopefully that was useful and clear. I don't know if it was clear, but I hope it was useful. So talk to you soon in the group. Don't forget to join us. Take care, guys. See you next time.